Hey, Billy, can you hear me?
Yeah, can you hear me?
Okay, yeah. So we had a little bit of a hiccup. Apparently, there was another event running in this platform that I couldn't do this. So I was like, but MJ was able to fix it. Let me look right now. I'm gonna want to make you let's see here. How do I make you a co-host?
Feel like is the lighting okay? Like a little dark?
It's a little dark, yeah.
Try to get some more light on it here. If I did a soft lighting behind me, it seemed like it was just a glaring bulb, even if it was a soft light.
Hmm.
So I've got it over here on the floor. The light's pretty bright though.
Okay, so Billy, I'm going to make you a co-host. Alrighty.
So it says you were in a practice session, start
We
webinar.
are. Yeah, this is just the initial. So what you'll want to do is once we start the official webinar, you can share the first um, frame on your PowerPoint, which is the intro with you on that first slide.
Yeah.
And then just yeah, it looks like we're good. Nicely done, man. Thank you. um and then just turn your camera off and mute, and then we'll just let that sit there, and then as people are coming in, I'll say, hey, we're about ready to start here in a little bit. And then when you're ready to go, you just stop sharing your screen, or turn your video on, turn your audio on, and stop sharing your screen, and then you can kind of do the introduction.
Okay, so it's up with, what do you mean stop sharing my screen? I have it up on like right now. Do you want to try it?
Yeah, yeah,
All right, so
definitely.
right now, that's not my presenter mode.
This is or is not?
So that's not, let me go to slideshow.
All the way to the left, yeah.
Yeah, from beginning, but I don't see my notes. Oh, here we go. So
Oh,
show
show
presenter
presenter
view.
view. Okay.
Okay, so what do you see there?
I just see that first slide, and then just video of you.
Okay, me over here on the side.
Mm-hmm.
Okay. There's some slides back here after 15. I'm just going to stop at slide 15, which is the call to action, how to reach us,
Yeah,
right there.
those others are hidden, so they will not come up.
Oh, so you can't even see that?
No, so if you go try to
Hmm.
arrow down again, yeah, see how yeah, you won't be able to advance past this slide.
Oh, okay, good.
So I just left those in there. Those are just templates, and we can use them. We
Okay,
can,
so I just hit that and then present review and I'm good.
yep.
Okay. Are they going to see you as well?
Uh, they shouldn't. Do you see me?
I do,
Obviously.
yeah.
Okay. Uh, Let me see what if I just stop my video, does it just show my name panel on there? So we already have some people that are joining.
Nice. 10 minutes early. Wow. I've got to move this out of the way. Is that background okay, Charlie?
Yeah, it's a little dark, but it's all
Get this
good.
thing right in my face. Nothing can get it any closer. I think it's, let me, I don't know. I don't know if the sun's worse or not. We want to wait a couple more minutes, Charlie, or do you want to go ahead and get started?
Yeah, we can get going.
Okay. Well, thank you everyone for being here on time. We appreciate you listening in to the Alternative Investing Unleashed webinar series. Today, we're talking about a very familiar topic. You probably hear in the headlines quite a bit, having to do with inflation, but more importantly, how do we manage inflation's impact on our investing portfolio? How do we manage inflation in our lives? We hear a lot about it. We know it's there, and we just want to tackle that today and see how far we can get with some great wisdom and techniques to take away from today's webinar. A little bit about me and my background. I started in the financial business, financial trading and equity trading desk many years ago as a market maker and trader. It was a very aggressive place where you had to pretty much win or lose every day. And that was the investment, you know, theory there is you had to be profitable. And that's just how it is on a trading desk. From there, I moved over to a portfolio manager position, co-founded and later sold a registered investment advisory firm, where for 12 or 13 years, we managed client portfolios, managed a lot of our own ideas, and you know, how to protect people in markets just like these that we're facing, uncertain times. There's always something. There's always risk to be managed, right? And then after that, I moved on to some business partners of mine. We developed some innovative investment products. I still love that side of the business where we just do things that are sort of unusual or a little bit different than maybe you see every day. And I've always had an affinity for alternatives. I've always loved the alternative space, and very, very happy to be a part of this webinar series. We will bring many topics to you that I think are very interesting and maybe that you haven't heard before. And so yeah, we're really happy to be in alternatives investment space. There are some disclaimers that we need to just at least be aware of. Past performance is not an indicator of any future results. Most everything I will show you today is for presentation use only. So feel free to read through this. pretty typical language. We are not investment advisors. We are not registered as a broker-dealer. So basically, we are not legally giving you any advice to invest, but certainly happy to answer any questions that you may have. If I do mention some of the funds that we have available at our firm, we have what we call a Fund 2 and a Fund 3 that are available for investment at this time. Fund 2 is for accredited investors. If you don't know what that term means, there are some legal rules around that, and we can discuss that. We have an investor relations team that I'll introduce later, and very happy to help you through those things if you want to invest as an accredited investor. If you're not familiar with that, we have a Fund 3 that is available for investing, and that is wide open to anyone. Minimum investment there is $1,000. You invest alongside of us. So just a little disclaimer there. If I mention any of these funds, that's what I'm referring to. So a few housekeeping items before we get started officially. We will save time at the end for questions, so feel free as we go along to punch in some questions. If there is something at that moment that's pertinent, feel free to jump in. I don't mind breaking up the cadence and hearing what you have to say, or if something isn't clear, please chime in, and Charlie, our producer, will help me get to those. We want to get it to as many questions as possible. I don't want to just teach or let you know everything that I know. I would love to hear what you want to know. So we are definitely open to your questions and anything that you would like to hear and take from this. There will be a replay available. So if you want to see it later, or something comes up and you can't finish the webinar in its entirety, we will be making a replay available later that we will send out. And again, any suggestions? We have some really interesting topics that I've actually uncovered in the alternative space recently. I've been in private equity and raised seed capital for startups, but I've also seen other investment opportunities that are really interesting. We have one investor working with us, and he invests in a portion of ATM machines. He can actually own a portion of an ATM machine, and he gets monthly income off of that. Just really innovative, cool stuff that is, somewhat recession proof. And another firm we heard about is renovating ships, big cruise ships. Maybe they're kind of dilapidated. They're buying them very cheap at scrap rates and renovating those and making luxury condos out of them, and run around the world in a luxury condo on a huge ship. So just really interesting things. Again, open to suggestions and hearing what you want to hear about more later. So when we dive into what inflation is, we see a lot of these things in the headlines and how inflation eats at our buying power. I don't think I have to spend a whole lot of time about what inflation really is. We all can feel it. We see it in our checkbooks. We see it in our budgets. Generally, it refers to the increase of prices in goods and services over time, which reduces our purchasing power. We all know that when growing up, you buy the same container of, say, a gallon of gas. You'd be lucky to find it under $3 today. I remember when I was a kid, it was under $1, for a long time. And now you'd be lucky to find something under $3, right? Like for a price of a gallon of gas. So we all, I think, conceptually understand what inflation is. What I'm here to do today is really, again, give you some valuable tips in how to get on the winning side of inflation and not just feel like we're getting whipped around by the whims of inflation and how it affects us in our daily lives. So the impact of inflation, shows up in many ways in our economy. If you look at other countries that do not manage or have the tools available to manage their inflation well, you see countries become very unstable. A whole lot of economic instability, and this does not bode well for their economies. It does not bode well for trust in their governments and trust in spending. It really erodes at many of those things, and consumer confidence goes way down. So when you're looking at a whole general picture of inflation and how it's really affecting your country and your economic prowess, it really does get to a place that can be scary, and no one really wants to experience, I think, what we've seen in other countries, Argentina has gone through many of these rounds, and you see some other smaller countries that just don't have the reserves or the GDP and the things to back them up like we do in our country. Excuse me, I feel pretty dry. So the tools that we have in the US are monetary policy. Monetary and fiscal policy are a little bit different. We'll get into that a little bit, but monetary policy is what you usually hear something coming from the Fed, right? The Fed is raising rates, they're lowering rates, they're trying to tame inflation, they're trying to spur growth. You know, when interest rates were at zero for a prolonged time, that is to let the banks just lend as much as they can and get it in people's hands, get people that want to build businesses and create businesses and borrow money and make things happen in the economy, right? But when that gets to be out of hand and when it heats up too fast and things just go a little bit haywire, companies have to be able to manage their costs well, and when they don't, we get into a whole lot of trouble. And this trouble shows up in businesses when you can't effectively hire cheap labor. I mean, labor costs have gone up quite a bit, and you can't create any more efficiencies in your supply chain or how you create your good or your service. I did just a quick search of recent bankruptcies, and it's kind of shocking to see some of these big names, like Bed Bath and Beyond and Party City, Rite Aid, Family Dollar, Joann's Fabrics is one of the most recent ones. These are pretty big household names, I think, for most of us, and we all know the struggles of big box companies, like Bed Bath and Beyond with Amazon and having things just delivered to your doorstep. There's some real struggles out there, and companies that are not able to adapt, companies that are not able to manage their own input costs and the effects of inflation are not good, and they won't survive. Um, they've exhausted all options to really be profitable, and when they can't get control of that, and we can't get ahead of that or create any more efficiencies, they go under, and that's when economies start to get a little uneasy, and you start seeing these going out of business signs, which is not a good sign. So how does our government, either fiscal or monetary policy, the Fed or the government, how are they able to work these levers and to try and work it in our favor? So we all know interest rates in the last couple of years have skyrocketed. And if you're caught on the wrong side of that monetary policy, then you suffer the consequences. We all know there were some bank failures, some very large ones like Silicon Valley Bank, and the banks surrounding them that are just really, really stressed. They got caught in an environment where rates increased the fastest in our history. From 2022 and on, the rate of increase was the fastest in history, and that's hard to manage. And you see banks that got caught with too much leverage on their books, or just not being, again, on the right side of interest rates working for them but against them. It can cause real damage. And I know that many people were scrambling to uh, you know see if they were FDIC protected. How do you get your 250,000 kind of max insurance covered there with your accounts? And a lot of people are scrambling because of the damage of that. So obviously, when the Fed increases rates, tends to tighten up lending and tends to slow down the economy. And it's exactly why they do it. Unfortunately, it costs people jobs. If they go too far too fast, it can throw us into a recession, which we all know we've kind of been dancing around. And again, lowering it is the opposite effect, right? We're supposed to spur the economy. So right now, rates have shot up pretty high and have stabilized quite a bit. We see in the news where they are talking about either lowering rates maybe later this year. They keep sort of kicking the can down the road. I heard first quarter of this year, then I heard May, now we're hearing June. So it could be an extended period, and we want you to know that there are benefits to that, right? I mean, if you are in CDs, or you're saving money in some way, you might be pretty happy about the rates that you're getting now versus when we were in a zero interest rate environment and you're getting just about nothing, right? Like maybe half a percent or something. And that's by design. So all of that is to help increase our savings rate, because ultimately that can help make a stronger dollar, at least temporarily. And all that is by design. It kind of pushes people into, where they should be investing and where not. And that's kind of the juicy center of what I want us to discover here today too. So there's also open market operations. The central bank can buy or sell government securities, kind of control the money supply that way. They can up the reserve requirements for banks and make sure that they are, um, you know, somewhat solvent. We all know that's probably not always the case. I mean, when back in the '08 financial crisis, the whole point there was too big to fail, and companies they didn't want big banks. They were trying to make banks regional or not keep all the money in the big banks. And guess what? After all of that carnage, the banks are even bigger. I mean, nothing worked. There's even more consolidation in the banking industry, and we probably even have a bigger issue, with banks. So they try to keep the banks healthy and raise the reserves. Um, there are fiscal policy tools. Now, fiscal policy is more government, not just Fed. So now we're talking about taxation. How can the government, I can't even use the word profitable because there's so much debt, but how can the government, sort of work these levers in the economy's favor or not as well, right? Raising and lowering taxes, things that the government can try to do. It's a much slower way to go. Um, and there's supply side reforms, which kind of improving infrastructure, reducing red tape, kind of trying to spur businesses and spur growth. I don't think the government does a very good, job of this, and should probably stay out of it. Um, how is our country doing with our monetary policy? Maybe you've seen charts like this. This is our total public debt. They're reducing our buying power by issuing more and more debt. And the long-term trend here is not great. You see that we are probably at a very unsustainable pace. We are now issuing $1 trillion of new debt every 100 days. So that's unprecedented. We have never really increased at that pace. It's becoming a bigger and bigger issue. Our government cannot continue to fund programs that they shouldn't probably be funding. I personally am a proponent of smaller government and more free market, but just overnight, I think they just had a vote where they raised the debt limit by $1.2 trillion. I mean, just overnight with the wave of a wand and printing this money and reducing our purchasing power. So that's not a good thing. And you're starting to see leaders out there like Larry Fink at BlackRock, Jamie Dimon at JP Morgan, and even Chairman Powell. They're all talking about this being unsustainable. And that's a word that we should all pay attention to when the leaders of these gigantic trillion-dollar companies and budgets are telling you that we are on an unsustainable path. I think we should all listen and step up and really take some control over your portfolio, take control over your own lives, and invest in ways that are going to make sense for you and protect you in times that could get scarier, with a stronger recession, or like I was showing you before, these bankruptcies and going out of business. So this is really what I want to get to is, how can we benefit from inflation? All this sounds out of our control. It sounds bigger than us. It sounds like people are working levers that we have, really very little input on. So how can we, benefit from that? And if most of these things are out of control, how can we be more prepared? How can we get our investments on the winning side? That's what I'm all about. You can't fight the wave. You can't fight the printing press. So what can you do? You can take control of your own finances and where you put your dollars and where you can win. So your investor mindset is very important. You want to look for safety. You want to protect your nest egg. For holders of certain assets like real estate, stocks, and commodities, for a while, inflation can actually increase those, right? It can inflate those prices. You see AI and everything in the stock market going crazy. If you own Nvidia or I think it's SMCI, the new one's being added to the S&P 500. And these things are trading at $1,000 per share, and these companies and prices are inflated. And for a while, that's okay, right? If you're happy there, you're making money. But there's usually a reversion to the mean. There's usually a real check to reality. And when those things get a little bit too far extended, they tend to come back to reality pretty quick. So, you don't want to be chasing those kind of returns right now. You want to be looking for safety. You want to be playing defense. It's not time to swing for the fences at what I would call a topish time in the market or a topish time in equities and things like that. You want to be disciplined. You want to be protected. You want to be in places that you feel comfortable about, and you're not really worried about what's going on in the world, and if there is a stock market crash and things like that. You want to be disciplined. So this is a chart. I like this chart because it shows many things. What we're looking at here is the gold and silver price, I think since 1990 to about currently 2023, 2024. And you see the price of gold and silver usually trade, they're correlated, they're going to trade pretty close together. And we're hitting all-time highs, right? We're hitting all-time highs in gold and stores of value like gold and silver. Some people view Bitcoin, however you feel about that, but some people view Bitcoin as a store of value. And they're all hitting all-time highs right now. Why is that? Because people are looking for safety. People are looking for protection. Now, uh, those don't pay dividends, and those may not be your first choices when it comes to safety. Some people think Bitcoin is not safe at all. And gold is you're basically just buying a price of gold. Very few people own physical gold, and if things go bad, they really aren't going to be trading probably in gold bars. But it is a very good defensive play. It is a very good safe play historically for 500 plus years or more. It's a very, very good place to go and kind of protect your assets and go to safety. However, right now we're hitting all-time highs. The other thing to notice in this chart is the CPI index. You may have heard about this in a lot in the news as well. I'm not going to go into all the things that make up. It is the consumer price index. It is somewhat of a measure of inflation. However, it does exclude the most important parts, which are food and energy. And I don't know about you, but pretty much the main things I need in my life to live are food, shelter, and energy. So they exclude that for a reason. Energy tends to be more volatile over time and can really skew the numbers of the inflation report or CPI numbers that they're trying to produce or give to us every month. And so notice the trend. I mean, this CPI index is a 45-degree and upward trending trend for a reason. It's the exact opposite of the value of your dollar. Your dollar is decreasing just opposite of this inflation index, right? So your dollar over time is just getting less and less valuable as goods and services become more and more expensive. So what do we do? How do you win? How do you find victory in these places? If gold is already kind of hitting all-time highs, maybe you have some allocated to that. That's great. However, there are places to win in environments like this. Real estate is an excellent hard asset place that you want to be. Real estate, is can be cash flowing. It usually gains in value. There's many things that you can do with it. There's tax breaks you can have around it. But in the alternative space, real estate is pretty much king. You really want to be involved in some way or another in real estate. Most people are trying to either own rental homes or you refurbish and rehab homes and profit off of that. There's always people looking for homes. We have a supply issue. There's just not enough out there, and tiny homes aren't going to serve everybody or most people. If you have pets or families or a growing family at all, there are areas where people are trying to make it work, and by and large, real estate is going to work for you. Real estate is a great place to be. We are big believers. Our firm is growing like crazy, and we are, of course, are big fans of real estate. Any other hard assets like gold and silver, typically good places to go, and um, and you ultimately want to be the bank. The difference I find with gold and silver is that they do not pay dividends, and you're just going to own your principal value over time. You hold that for a year. Let's say the price of gold and silver become flat. You're just kind of riding that. You're not really getting clipping coupons or dividends or getting any real cash flow benefit out of that. Again, that's why I like real estate, cash flowing, other cash flowing alternatives that we will discuss in future presentations. And ultimately, most people that I know that get into real estate, they want to be the bank. They want to lend out money to credible people that are, investing in real estate themselves, doing it together in one of our funds, which you partner with us, and we go out there and we do a great job of investing in local real estate, high growth areas, like the Pacific Northwest, and people, places where we are headquartered. It really is. It really is important how you invest in real estate. It's such a broad term, and not all real estate is created equal, right? There are stresses that you're hearing about in the commercial space. Again, that work from home mentality, and again, there's some leverage there that needs to be worked out. I think New York Community Bank is the one that was just kind of taken over conservatorship. They are feeling the stresses of those commercial loans. So you want to be careful. You don't want to be in a whole lot of areas of real estate just because it says real estate. You want to do your due diligence. You want to be careful, and that's what we are here to do today. We're here to help guide you, help show you, where you should be investing in real estate, how you can make consistent passive income if that's what you want to do, or be more aggressive. Get out there and own mini homes or own fix and flips, and again, take control of your own investments that are working for you and not getting whipped around by these inflationary pressures. So I'm going to introduce you to my team. This is our investor relations team at Secured Investment Corp. We are here to guide you much more in depth on the topics that I'm covering today, but certainly in the real estate space and the funds and notes that we offer and things that you can invest in and create that passive income stream. We are here to help. We are very capable, great team. We work with probably a dozen custodians, self-directed IRAs. If you're not familiar with self-directed IRAs, I think only about 4% of the assets out there are in self-directed. Most people know what an IRA is. If you roll over your 401k and you get into an IRA, self-directed IRA is taking control again of your own investing. It opens up many more avenues for you to invest in directly into LLCs and real estate and things that you really won't ever hear your financial advisor offer or do for you, because again, that's in their control, and you need to put it in your control, or at least a portion of it. This isn't really an all or none conversation today. It's you need to be overweighted right now in these hard assets that I'm talking about. You need to be overweighted in cash flowing, defensive, safe assets. It is not time to be gambling. It is not time to be buying at the highs of the market. And you really want to be disciplined, prudent, and make money and get on the winning side. So hopefully there's some good tips in there for you today. Again, we are open to hearing more about what you have to say and any other investments that you would like us to explore and research. Be happy to discuss those with you. Feel free to use this QR code or take down our web address. Reach out to us. Reach out to me personally. I'd be happy to work with you, guide you through 20 plus years of investment management, portfolio management experience. Do what's right for you. Get you where you are in a safe position, making money, and not worried about all these inflationary pressures. Not worried about a recession. Don't buy into the fear game that they're always pushing, and really have the confidence to take control in your portfolio and how it can work for you, which is what your money should be doing for you. So on that note, I'll kind of wrap up and see what questions we have. Charlie, do we have anything come in?
Yeah, Billy, thanks for that. Yeah, Eric asked an interesting question about any good collectibles worth investing these days.
Oh, collectibles. Yeah. So, by the way, these are not lobbed out questions. These are not staged questions. I think it's better to free flow and understand where your head's at. These are not set up questions at all, which makes it more fun for me. So, Eric, yes, thank you for that question. I actually love this space. There are a ton of collectibles that you can invest in now, and there's actually some really cool platforms out there. I have the names of a couple. I will. I could probably follow up with you, or we can get that information over to you. The one that I invested in a Spider-Man. What is it? Spider-Man 15. I think it goes for about $25,000 an issue. It's a Spider-Man collectible comic book, and I was able to invest in that on a fractional basis. So you could buy X number of shares, let's call it 100 shares out of 1,000 or whatever, and you could own a fractional piece of Spider-Man 15, I think it was, and we bought it. I think it was it was appraised around 25,000. And I think a year later, I don't think it was a year later, maybe a year later, we sold it for about $90,000 was the offer. It's not a bad return in the collectible space. So I'm really glad you brought that up. I know baseball trading cards are really big, and it's a really, really interesting area because you can start owning fractional pieces of things that are really cool and interesting. So yeah, thank you for that question.
And then just I'm curious myself, uh, any kind of off the wall types of uh, funds that you're seeing in the space anymore, like A plus reg funds. I know that there's collectible car funds. Anything else, just out of curiosity, out there that looks interesting to you?
Yeah, definitely. There really are. And again, I think the interesting part about all that is instead of you having to go out there and go to an auction or try and find all the research and what might work, there are funds available, and we can get you some names on that. But yeah, there are investment groups and funds that are out there that will invest in classic vehicles, and yeah, just all kinds of, I think, classic airplanes and army jeeps and all kinds of things to profit of. Really, really cool wide open space. This is why I love this series. This We are truly unleashed. We will explore all these alternative spaces. Come back for more. We will research them. We will get them out to you, and take a deeper dive and get some of these professionals that are doing it, and have you speak to them directly, because I think there's some really, really amazing opportunities out there. And let's face it, those things do not decline in value over time. I mean, if you have a Jaguar E-Type, you're doing pretty well. Those are going to keep gaining value over time, and people take great care of them, and are really passionate about them. So yeah, I think there's some really, really, really cool opportunities out there.
Thank you
Anything
for
else?
that. Yeah, yeah. Peter asked a question. How do you invest the $1,000, and what is the return?
Oh, that's great. Yeah, thank you, Peter. So if you want to invest alongside of us in one of our funds, that would be our Fund 3. You're welcome to reach out to us at Secured Investment Corp, or type in your email address or something. We can definitely reach out and get back to you. But yeah, Peter, it's the returns on that fund. I think it's a target of 6% preferred rate, but we've been crushing that ever since the inception of the fund. I don't think we've ever returned less than 6. So I think it's closer to 7s and 8s that fund has been returning. And and again, you're investing right alongside of us, professionals that have been doing it for over 20 years, very, very well versed in the space. So yeah, again, cash flowing real estate at 7, 8%. That is the sweet spot of where you want to be. Our fund 2 actually has a pref rate of 9%. Has returned as much as 14% on certain years, with a target of 12% on that one. So we're doing really well in that fund as well.
And then Tim asks, do you need to be accredited to invest into our funds?
Yeah, so in one of our funds, yes, and one you do not. So again, our fund two, we call it, is designed for accredited investors. It's a minimum of $50,000 investment there. Again, 12% target rate that we're shooting for, and a really, really great place to be. I personally love this fund and is driving many of my former clients, people that I've worked with, into this fund. And yeah, very, very solid, good place to be.
All right. Anything else to add, Billy? It looks like the extent of the questions we have tonight.
No, I think, to sum up everything, try not to buy into the fears of inflation and the fear of the headlines and what's going on in the world. Take control of your investment portfolio, whether with us or someone else. We are obviously here to help. We are obviously big fans of real estate and done very, very well in this space. Get your money working for you. Um, Stick with us, because it's going to be a very fun series that we will uncover and find these other topics that we talked about and brought up today, which are great topics: fractional investing and collectibles and things like that. I'm so glad that came up. We we are really excited to go down this path and bring you quality, advice and research and people that are doing it, and we're really excited about doing that going forward. So thank you all very much for being here. Really, really appreciate it, and we'll see you. We'll see you on the next one.
Thank you, everyone. Have a great night.
Thank you all. Feel free to reach out to us anytime.